Here, this is where Aneta, I think, based on what it's claiming and what the blockchain is coming into being for, means it's going to be relatively strong. There are a few more use cases, but these are the ones I would like to highlight here. Okay, DeFi applications capabilities, going into derivatives such as futures and options using AnetaBTC, and then the possibility of interacting with stable coins when you're diving into DeFi, and then using a non-custodial method via smart contracts utilizing a permissionless protocol. That is a very good use case. And then the fifth one, decentralization with low and predictable transaction fees. For a relatively new project like that, small project like that, coming up and joining the likes of Ethereum, Avalanche, and Cosmos, that's quite impressive. Hi guys, it's FD for Stage5.tv once more. Today I am doing a follow-up on our last video on drip drops. This time we're picking a specific coin or project, and the project we're going to be looking at today is CNETA. CNETA in Cardano, but it's Neta in Ergo, two blockchains. So AnetaBTC is a project that is a fully on-chain decentralized protocol that allows Bitcoin to be directly wrapped on the Ergo and Cardano blockchain. AnetaBTC enables Bitcoin holders to unlock the value of their assets in a secure and efficient environment to provide yield without selling any Bitcoin and without any third-party custodian involvement, as is the case with WBTC, which is on the Ethereum blockchain. At the present moment, WBTC is the largest Bitcoin protocol available, and there are billions of value logged in within that protocol. AnetaBTC has got a maximum token of 2 billion, of which 50%, i.e. 1 billion of the maximum, on the Ergo blockchain, and the remaining 50%, which is another 1 billion, on the Cardano blockchain. The ticker names for each of those are Ergo, Neta, N-E-T-A. On Cardano, it's CNETA, which is C-N-E-T-A. So total, it's 2 billion. Waiting to see how they can run that, because if it's down to the network effect, I don't think the two networks have got similar network activity. I think Cardano has got more activity going on, even though it doesn't have a lot going on the blockchain, but the community itself, I think it's more involved and it's larger by multiples to that of Ergo. So I'm waiting to see how that works. The total allocation of the coins are as follows. 70% or 1.4 billion tokens are reserved for the public, and they're currently doing some distribution via drip drops as well as some incentive programs on the Ergo blockchain for the Ergo community. They are doing that at the moment. There seem to be a lot of incentivization on the Ergo blockchain than on the Cardano blockchain, because on the Cardano blockchain there was only ever 2 drops to those who could claim on drip drops for any wallet that was qualified to make the claim via drip drops. The first one was for 1,000, and it was for the first 10,000 wallets or claims to be made. The second one was for 40,000 wallets, and it was only 50. So the first one was bigger because it was 1,000 Neta tokens available, whereas the second one was only 50, and it was only 2 million, if my calculation serves me right. So that is the brief history behind the two. Then the value proposition of CNETA will be covered when we start looking at use cases. The main reason why we're doing this session today, it's a DYOR, Risk Evaluation Assessment of the CNETA token. DYOR stands for Do Your Own Research, but I've managed to turn that into a toolkit that anyone who is coming into the cryptocurrency space can use. Are you new to crypto? Are you struggling to find your feet? And are you struggling to separate the noise from facts? This is the whole objective of videos I'm trying to bring to you guys, to help you make up your own mind. This is not an instruction. This is not financial advice. These are my own opinions, guys. If you need financial advice, please go and seek someone who is qualified to do so. I'm not a financial advisor. My background, I've got a couple of roles within the medical technology space, and I enjoy what I do, but also diving into cryptocurrency. I've been within this space for about 2 years now, and I've been enjoying it, and I want to see where this can go. And I've covered some of the reasons why I'm in this space and what I'm going to do next. If you want to know all about that, please check my other videos, guys. Also, don't forget to click like and subscribe, as well as smash that notification bell. Anyway, let's dive into it. So we are going to apply 13 elements that we use to evaluate any project that we're trying to do our own research on, and the 13 elements are as follows. Decentralization. How decentralized is the project or protocol that you are about to invest in? Security. Is the protocol or the project you are about to invest in, is it secure enough? Has it suffered any recent security breaches, or has the fundamental code or the code underpinning the blockchain, has it been audited by an independent body? Scaling. Does the project scale when it comes to high volume? Does it go slow, or do the transaction fees increase because it's operating at peak capacity? What about interoperability? Does the project work across its own boundaries? Does it it reach out to other blockchains and communicate, share data, and so forth. We then look at the project team. Is the project team publicly available? Do they have any public profile on different social media platforms? Social media, Twitter. Does the project has any presence on Twitter? Okay, and how many followers do they have? Social media, Discord. Do they have a Discord community? How many Discord members do they have? Age of the project. How old is the project? Was it launched last year? Was it launched 10 years ago? Was it launched yesterday? What about the age of the project? How old is the project? When was it launched? Use cases. Are there any real world use cases for the project or protocol you're about to invest in? What about tokens issued at project launch? How many were they as a percentage of the total? Does the project or the coin has a maximum? What about the value or quantity of tokens in circulation? And the insiders, those who are closely linked or related to the project, how much in terms of holdings do they have of the coins you're about to invest in? So those are the 13 elements we're going to apply to CNETA and see how it performs. CNETA is for the future. It's not for today. It's for the future because it's going to launch, if my understanding is correct, it's going to fully launch sometime during the second or third quarter of this year, if not the fourth, but it's not going to be now. It's probably going to be third or fourth quarter when it's going to launch its full suite of products. Anyway, so once we've ranked the project against the 13 elements I just highlighted, we then use a scale that looks at whether the project is a no-go, don't invest in it, could go to zero, there is always an inherent risk. Does the project have any potential? Or the ultimate level, which is go for it. We are saying this project has got potential and it's relatively safe to do so. Guys, also bear in mind that any project, even from Bitcoin all the way to the last least value coin or project, they can all go to zero. That is the inherent nature of digital assets. Guys, again, this is not financial advice. These are my own opinions. This content I'm sharing with you today is meant to be for entertainment as well as educational purposes. Do your own research. Right. So the first element we are looking at is decentralization. CNETA is based on fairly decentralized blockchains, i.e. Cardano and the Ergo blockchain. So it derives its own decentralization from the blockchain it's built on. That said, I'm going to give AnetaBTC 7.5 out of 10, which is 75% of the points available. What about security? Again, because it's built on fairly secure blockchains, i.e. Ergo blockchain and the Cardano blockchain, we can safely make a deduction that AnetaBTC is also fairly secure. What about scaling? We know the Ergo blockchain does not have any issue with scaling, but currently Cardano struggles to scale. It does not break down or it does not stop, but it just slows down. We've had examples of that in the recent past. So based on that information, we are going to give AnetaBTC 5 out of 10, which is 50% of the points available. What about interoperability? We know both the Ergo blockchain and the Cardano blockchain are designed for interoperability. So based on that, we can also safely claim that the AnetaBTC protocol will also be relatively interoperable. So based on that information, we are going to give AnetaBTC 7.5 out of 10 on interoperability. What about the project team? Based on my recent check, there were approximately 15 team members on the AnetaBTC website, which puts AnetaBTC in the 75th percentile in terms of ranking, because any project with between 10 and 100 or 10 and 40, we do give it 7.5 out of 10. What about social media? Twitter. AnetaBTC has got 24,200 Twitter followers. So based on that, again, the criteria we use when we're ranking these elements means we are going to give AnetaBTC protocol 7.5 out of 10. What about social media on Discord? Here AnetaBTC has got just over 7,000, so it's lagging behind a little bit. So we are going to give it 2.5 out of 10, which is 25% of the scores available. What about the age of the project? Again, here AnetaBTC is relatively new. It was only launched sometime last year in 2021. My rough estimate is putting it at around November time, but I'm not quite certain on that, which gives us again 25% of the points available, 2.5 points out of 10. Use cases. Here, this is where Aneta, I think, based on what it's claiming and what the blockchain is coming into being for, means it's going to be relatively strong. On use cases, we are looking at a wrapped Bitcoin, which allows holders to utilize Bitcoin in a wide array of DeFi applications, such as yield earning products. The next use case is derivatives, such as futures and options, and one of the most important pillars of the blockchain DeFi ecosystem ecosystem, i.e. stablecoins. The fourth use case is permissionless element of the AnetaBTC protocol, where it allows for non-custodial interaction of Bitcoin via AnetaBTC using smart contracts. I think that is a very strong use case. And then lastly, we've got decentralization with low and predictable transaction fees. There are a few more use cases, but these are the ones I would like to highlight here. Okay, DeFi applications capabilities, going into derivatives such as futures and options using AnetaBTC, and then the possibility of interacting with stable coins when you're diving into DeFi, and then using a non-custodial method via smart contracts utilizing a permissionless protocol. That is a very good use case. And then the fifth one, decentralization with low and predictable transaction fees. So for me, those are very strong use cases for a very young project like AnetaBTC protocol. So based on that information on use cases, I am going to give AnetaBTC 5 out of 10 points, which is 50% of the points available. What about tokens initially issued at project launch? Here there is no viable method to gauge how many tokens are actually in circulation. Both CoinMarketCap and CoinGecko, they are not showing that much information. AnetaBTC protocol for both its tokens, i.e. the Neta token on the Ergo blockchain or the CNETA token on the Cardano blockchain. Therefore, we are going to put more weight on the fair launch that I think they are engaging in, where they are distributing the tokens to the community. So based on that alone, we are going to give AnetaBTC protocol 5 out of 10. What about tokens in circulation? Again, there is no information on that. I've looked at both CoinMarketCap and CoinGecko, and they are not giving us that much information. But again, based on what we just said on tokens issued at launch and the fact that they also have a hard cap, 2 billion tokens, we are going to give AnetaBTC protocol 2.5 points out of 10, which is 25% of the points available. What about maximum tokens available? Again, you probably know by now. AnetaBTC has got a hard cap on each of the two blockchains it's operating on, i.e. Cardano, 1 billion, and on the Ergo blockchain, another billion, which gives us a hard cap of 2 billion, which is always a positive thing. So we are going to give AnetaBTC 5 out of 10 points, which is 50% of the points available. And finally, insider allocation. Again, based on the fair launch that is happening at the moment and some of the information that is available publicly, we know a combined total of 30% of the tokens available are going to the team and or those closely linked or associated with the project, with 70% going to the public. So that is a strong case in terms of 30%. For me, that is my threshold. My threshold is 25%. If it goes above 25%, red flag, and then it goes beyond 30%, you're probably not going to touch it. So at 30% maximum and project insiders and 70% the public, that is commendable. I am going to give AnetaBTC protocol 7.5 points out of 10, which is 75% of the tokens available. So there we have it, a quick rundown. AnetaBTC, the protocol that is bringing Bitcoin to both the Ergo blockchain and the Cardano blockchain. On decentralization, we gave it 7.5 points out of 10. On security, we gave it 7.5 points out of 10. On scaling, we gave it 5 points out of 10. On interoperability, we gave it 7.5 points out of 10. The project team, we gave it 7.5 points out of 10. On social media, Twitter, we gave it 7.5 points out of 10. What about Discord? We gave it 2.5 points out of 10. The age of the project, it's relatively new. We gave it 2.5 points out of 10. Use cases, it's got 5 use cases that we outlined, so we gave it 5 points out of 10. Tokens issued at project launch, we gave it 5 points out of 10. Tokens in circulation, we gave it 2.5 points out of 10. What about maximum tokens overall? We gave it 5 points out of 10. And insider token allocation, we get 7.5 points out of 10, which then gives us an incredible 72.5 points out of 130 for a relatively new project like that, small project like that, coming up and joining the likes of Ethereum, Avalanche, and Cosmos. That's quite impressive because that puts AnetaBTC protocol into the 69 to 89 range out of 130, which is could go to 0. But so could Bitcoin, so could Cardano, so could Ethereum, and so forth. But it's not right at the bottom. That is always an impressive thing for these new projects, especially for a tiny project like AnetaBTC. Anyway, so what do you guys think? Do you think that's a fair reflection of AnetaBTC as a protocol? Are you going to change your investment strategies, your investment approach based on what we've covered for AnetaBTC? Are you going to invest more or invest less? If you've got a position already, are you going to pull out of AnetaBTC? If you're thinking about it, has this convinced you to do a jump in, obviously having done your own research. Guys, always do your own research, because what I'm sharing with you today is not financial advice. And also don't forget to click like and subscribe, as well as smashing that notification bell. So guys, there you have it, AnetaBTC protocol. What a project, huge potential. Thank you very much guys, that's it for today. Thank you very much and bye.